Thank you, Mr. Chairman, for your service. Let me ask you something. The Northeast Corridor, where I come from, in New Jersey, New York, that region, generates about 20% of GDP for the entire nation. If we had a major infrastructure failure, for example, the closing of one or both of the Trans-Hudson tunnels into New York City, the end of the Portal Bridge, which is the linchpin that takes Boston to Washington throughout the Northeast Corridor, would that not create a significant economic risk?
If it were sustained, yes. I mean, you're talking about a sustained closing, that could. I mean, things happen and then we fix them and they don't show up much in GDP. But if they're sustained, then yes.
Well, let me just share with you something I'd like to bring to your attention as you look at these issues. Amtrak estimates that a shutdown of the Northeast Corridor for a single day, talk about sustained issues, would cost our economy $100 million. Again, that's just in one day. So if we cannot get this infrastructure to ultimately be sustained, and we saw through Superstorm Sandy tremendous damage to the Trans-Hudson tunnels. They're both a century old. We have a century-plus bridge that doesn't close correctly, that stops the entire traffic across the Northeast Corridor. So every lawyer, every medical patient, every business that does intercity rail travel across from Boston to Washington gets stopped and loses time. And if it can't be closed successfully, they take sledgehammers to close it. That has a significant economic impact. And I would urge the Fed to look at that as a question about our infrastructure needs. That's why I'm so frustrated by the administration not seeing the importance of what we call the Gateway Project, 2 new Trans-Hudson tunnels, the rebuilding of a 109-year-old Portal Bridge. We just got some good news on that. But overall, this is a project of national significance in a region of the country that generates 20% of GDP, for which intercity rail traffic is incredibly important. Let me turn to the Community Reinvestment Act, which I think is an essential tool as one of the minority members on this committee and in the Senate against discrimination, about curbing redlining, meeting the needs of low and moderate income families. However, instead of strengthening this important civil rights law, the OCC and the FDIC released a proposed rule that relies heavily on a dollar ratio metric for measuring all of a bank's CRA activities and gives little value to community input. Mr. Chairman, why is it important for an updated CRA rule to focus on loan count rather than on dollar value of a loan?
In our thinking, loan counts are important because they go to the very purpose of the statute, which is to assure the provision of credit to low and moderate income individuals and to their communities. So we think that loan counts are an important aspect of that, in fact.
Do you agree with Governor Brainerd that focusing on loan value, as the updated OCC and FDIC proposal does, quotes, runs the risk of encouraging some institutions to meet expectations primarily through a few large community development loans or investments rather than meeting local needs?
I think it's a risk, and really, as you know, we worked to try to get fully aligned with the proposal. We weren't able to get there. They weren't able to get to our proposal either. So we're going to be looking to see the comments on all those provisions, which will be coming in. We'll be carefully looking at those as we think about our path forward.
When you say that, did you share, the reserve, share its concerns about emphasizing metrics that place too much value on loan volumes and not on the community input?
Yes, we shared all of our work, and we tried, and they took many of our ideas. By the way, they incorporated a lot of our ideas. So
they did.
I think yes, they did. But
we were not able to send us what particular items were incorporated that you shared with them.
Sure. Well, they've Comptroller Otting has identified many of them in his testimony in the House a couple weeks ago as ideas that they had incorporated from our work.
But the key concern seems to have been ignored. In particular, the one that.
So I think their proposal looks at both counts and dollars. So but there are a number of differences,
So, a final question on this. Have either you or Governor Brainerd taken the CRA proposal to the Federal Reserve Board yet?
No, we haven't. We've been really, our focus was on trying to get on side around one proposal with the OCC and the FDIC, and now we see ourselves as waiting to learn more from that process.
Well, for those of us in communities of color, this is critically important, and I hope the Fed will show leadership in this regard and make sure that the community participation continues to be a hallmark of what the CRA is all about.